Okay, so we might as well get started now. So again, everyone, thank you for joining. My name is Kyle DeVigi. We have Nish on the line as well. We're going to be doing a little bit more introduction in a moment, but we are very happy that all of you have been able to join and to attend today's call. So let's dive into the presentation. I'm going to quickly share my screen and jump into this. Nish, is that looking okay?
Yeah, we only see the slides, which is what we want to see.
Perfect. So yes, why buy Calgary? That's what we're talking about today. So jumping into it, Alex was not able to attend, but he is our team lead and owner and broker of record at Remax Wealth Builders. He's been selling real estate in Toronto for over 15 years and was actually the #1 Remax agent in Canada for transactions last year. So doing a lot of volume, one of the premier pre-construction condo salespeople in all of Canada and very distinguished. He started with a single deposit of about $39,000 and turned that into a $7 million portfolio. And this is his list here. We like to be transparent here at Remax Wealth Builders. And this is actually what his portfolio is looking like today and the current values of it. Roughly about $17 million, which is pretty crazy. And you can see over time that value continues to grow, just based on reasonable appreciation, where value today about 17 million growing to about 42 million over time. Now, this is the expert portfolio. You don't need to go this big when you're real estate investing. And for the average person, this is completely out of the sort of scope that you would be looking at. And that's where I come in. My name is Kyle DeVigi. I'm licensed to trade real estate in Ontario and Alberta. I have been investing in real estate for over 10 years. A little bit smaller than Alex. I don't have 17, but I have 6 properties, which has grown over time. I didn't buy all of these at once. I had a previous day job before this. I was a career, I had a salary, and I was able over time to slowly grow that portfolio. And where I did work, I was actually the draws manager for Lotto 649 and Lotto Max in Canada, running those draws nationally. And my time there, I actually learned that about 1/3 of people were planning to fund their retirement by winning the lottery. That's a mind-blowing statistic. The odds of winning one of these draws, multi-tens of millions to 1. You're not going to be funding your retirement by playing the lottery. So I decided to switch over careers and actually help people invest in their futures. And I've been really successful at doing that. This year alone, I've helped over 170 people personally from across Canada to invest in pre-construction property in Calgary. And like I said, I started like Alex. We invested in the same project back in 2012. I put down a $38,000 deposit, and now I've grown that into about a $4.5 million portfolio of 6 different properties in the GTA as well as Calgary. Calgary is where I bought my most recent property, and that's where I'm continuing to buy my properties as well. And you can see that this $4.5 million current market value today, that'll grow to over $10 million in 30 years. That does not include any of the cash flow that I'm going to get on those properties or the principal repayments as well, because in 30 years, all of those properties are going to be paid off for. And now, Nish.
Thank you, Kyle. So my journey into the real estate world, everyone, began in November of 2020. That's when I got my license in hand, started trading in real estate in early 2021. So it's been about 2.5 years approximately that I've been in this business. Prior to that, actually, let me talk a little bit more about what I've done in the last couple of years. Had success with selling resale properties, and started my first investment property back in 2006. And currently I am the landlord and owner own a financial stake in a total of 9 properties, 2 here in the GTA, and the last 7 have been in Calgary. Since I started pre-construction sales in 2022, I've sold over 175 units in Calgary. Kyle's number 170, that's just this year. So Kyle's doing tremendous amount of volume. One day I'm going to get there too, Kyle.
But these numbers alone are insane. So good for you too, Nish. Like, we're some of the top sales agents in all of Canada selling Calgary today.
Yeah, no, thank you. And I've learned a lot from both Alex and Kyle. And prior to my time as a salesperson in the real estate game, I was in the corporate sector for almost 22, well, actually over 22 years. And just like Kyle, I want to highlight what happened in that career that was really an eye opener for me. So the company that I was working for, we are in the entertainment industry. It's family friendly entertainment, that is in person experiences. And in March of 2020, when we were all hit with COVID and the realities of what would happen in the next few years after that, I kind of saw the writing on the wall. I knew that our business would not survive when we aren't able to host in-person events. So I thankfully had already began my journey into the real estate world. So I was able to pivot. What happened, however, is all the contributions that I had made into my company's retirement funds, the mutual funds, RSPs, all those types of benefits that companies offer, they were all gone because the company went bankrupt. Now, many of my colleagues who were older than I and were depending on some of these financial aids and assistances after they retired found themselves to be lost. Like they didn't know where they would be able to fund their retirement because all these financial investments that they had made with the help of our company, they were non-existent. So this was really an eye opener for me. And as we start to look more and more at what the population in Canada is looking like, we are just over 41 million people, and 27% of that population are in the ages of 60 to 85. So in the retirement years. What this means and what I foresee, and hopefully I'm wrong, but I don't believe that when it comes time for myself to retire and people in my generation and younger, that we can actually depend on the Canada Pension Plan or any other type of savings that's outside of our own control to help our retirement future and the financial future of our families. So this is really where the real estate component plays a much larger role. And I'm excited to actually share what my portfolio looks like. I was able to convert, the initial properties that I had in the GTA, and I was able to 4x them in under 2 years. So in the spirit of full transparency, this is what my current portfolio looks like. My first two properties back in 2006, and the current property that I live in which I purchased in 2017. They have a rough estimated value of about $2 million, but all the additional properties that I have invested in have been in Calgary. And you'll see that they started in 2021. And the most recent one was back in April of this year. Today, my portfolio is worth just over $5 million. And then again, looking at time in the next 30 years, it'll be over $12 million. And this is calculated at a very, very conservative 3% year over year appreciation. And it does not include any of the cash flowing values or the principal payments that are paid back into the property. We will talk about the last 7 that I invested in, why that's important. But now happy to slide on to the next one.
And that's where our brokerage comes in. We do what we preach. We've helped over 1,000 people from across Canada to invest in pre-construction properties in Calgary since 2020, and we've sold over $400 million worth of pre-construction units there. That's almost $500 million. So we know the markets. We're experts there. We do this every single day. But like I said, we practice what we preach. Our team has personally invested in 20 pre-construction units there. I think that's the most of any brokerage out there in the world. So it's a testament to how strongly we believe in the Calgary market. And we're all continuing to invest in Calgary as well because we continue to see huge potential in the city. And this is where, like Nish said, many of us cannot depend on an employer or government to provide a pension fund to us. And oftentimes, you want to be able to keep your home in retirement. You don't want to have to sell it. So using the equity that you have now can allow you to fund your retirement later. So multiple ways to do this, but you can leverage some of that equity, taking it out to invest in additional properties. because the time value of money is what you're getting here. And what Nish said, he's bought multiple properties. He hasn't put down all of that money on them. This is a leveraged asset. And over time, with inflation, with population growth, real estate will continue to go up in Canada. And that's how you can continue to build a portfolio and to build a retirement fund for yourself. And putting it in perspective, you don't need to build a $14, $17 million portfolio where each $350,000 condo, and we can get you this in Calgary today. This represents about $24,000 of annual income in your retirement years that you'll be getting. But you still have the asset as well if you needed to sell it off later, with a big life event or something like that. So this is how you can build your own personal pension fund without relying on anyone else. You don't have to buy a ton of them. All you need to do is buy one, and you start to get the effects. And this is what that looks like. Now, have scaled this up to $1 million real estate portfolio as the lowest value, but that would be three $350,000 properties, which is, many investors that we speak to, this is something that is within their ability. So for every $1 million value portfolio, yearly payout is about $42,000. So that is amazing. The time value of money, seeing that grow over time.
And Kyle, that's in today's purchasing power as well, not 24,000 or $42,000 in 30 years. That's the equivalent of what $42,000 will buy you today.
Exactly. And you can see as your portfolio starts to grow, that amount continues to grow as well. And this is why, I'm primarily invested in real estate. Alex is completely invested in real estate. We strongly, strongly believe in real estate over the long term. So why are we investing in Calgary? Well, Calgary is really coming into a time of its own. And a lot of people don't know a lot of really neat information about Calgary. It has been voted the most livable city in North America multiple times. So not just Canada, across North America. It's very livable because it's sustainable. It's got amazing healthcare, good culture there, very good education, which multiple employers continue to reference. But they have very good infrastructure as well that's paid for majority by the oil and gas royalties that they continue to get, and those are going nowhere anytime soon. They score very high on the Global Livability Index each year as well. There's a very high quality work-life balance, and you earn a very strong income and very affordable cost of living as well. So it makes it a fantastic city to be living in. It's located in the foothills of the Canadian Rockies. So within about an hour and a half drive, you have actual mountains to go to, skiing, winter sports. Whereas in Ontario, the closest big mountain might be Blue Mountain, and that's not even a mountain. It's still kind of a hill, nowhere near the quality of skiing and outdoor activities that Western Canada has. But also tons of green space, spread throughout the city as well. And like I mentioned, second lowest cost of living of Canadian cities and ninth lowest cost of living in North America. And this is becoming important because interest rates have gone up. They're affecting absolutely everyone across the world, really. But in Canada, it's especially affecting those in the major cities where the real estate prices were already very high. Calgary, on the other hand, has very affordable real estate, especially once you consider that it's the fourth largest city, the third largest actual city, but fourth largest metropolitan area in Canada. So many people are flocking to there. And I'm going to give you an interesting fact. Normally, I speak exclusively to investors. Nowadays, about 1 in 5 of my phone calls are from people considering moving to Calgary themselves. Everyone seems to know someone that has already moved there or is considering doing it. And it's really starting to snowball.
There's one other very interesting fact about, well, not fact, but what I'm experiencing as well, Kyle, is more than ever, I'm actually getting Calgarians that are calling me wanting to invest in their city as well, which wasn't the case, 4 or 5 months ago. But now we're seeing that trend increasing. And I would say over the last month in September, maybe 30% of my investors have been local to the Calgary market. So they are starting to see the value of investing back in their own city as well.
Absolutely. And that's a great point, actually, where some of the projects I've actually had a majority of investors like Plaza West. People see the potential of some of these areas. And yeah, they are significantly investing in their own community now, which is amazing to see. So one of the
So,
sorry, Nish.
no, go ahead. Sorry, go ahead.
One of the top questions that we get often is, people notice, hey, pre-construction prices are priced higher than the resale market. What's going on?
Yeah, which is a very interesting question because people will typically look at resale prices for condos, and then they look at the prices that we have from our developers that are higher than that. So first and foremost, you have to compare apples to apples. The average price of a condo also includes condos that are 20, 30, 40 years old, right? There's a small amount of those condos that are recent, but the majority of the resale properties out there have many years under their belts. So that's one thing. The other element is you are buying into a future product. And we know that prices will increase for construction, material, labor, all those things. So that cost is worked into the price of a future property, which is what pre-construction is. That said, if I can talk about a very personal, not a personal, but a very specific situation that I experienced a couple of years ago, was when, in fact, I ventured into the Calgary market to buy my first pre-construction property. My wife and we bought a townhouse, and I'm going to share the numbers here just to make sure that I'm being fully transparent. We were able to get a 4-bedroom, 3-bathroom townhouse for $370,000, $369,000. That was, about $40,000 to $50,000 more than what the resale market was selling in that area. Again, granted, it was a mix of a bunch of different ages, but generally higher than what was available on the resale market. When we took possession of that property in September of 2022, so a year and a few months after we made the initial investment, we got a bank appraisal, which was significantly higher than the purchase price. So the bank appraised it for nearly 6 figures more than what we bought it for. So this goes to tell you that my initial investment had now almost seen twice the return when it came time for me to take possession. Comparing that property, the one that I took possession of, a brand new property, that property was selling for much higher than other properties that were aged in the same area. So you are going to see the value of what a pre-construction property can do for you when you add the time element, and also when you add the fact that your initial investment is only going to be the down payment. Initially, it's going to be approximately 10%. When you take the property, you're going to drop another 10% because you're putting down 20% for investment property. But that 20% for 370,000, which was, what is it? Let's say $75,000 is my capital investment. Just purely on the increase from the bank that I got at appraisal time was double what I had invested. Not to take into account what the resale market would account for if I decided to sell it, even though I didn't. That is really where the power of pre-construction is. You're able to get a property at a rate that's locked in. You allow the market to appreciate, and then you'll see the significant growth in your investment when you add time to that property.
No, exactly. And one of the biggest benefits is this is pre-construction. It has not been built yet. So at the very end, say that's 3, 4, 5 years away, you're ending up with a brand new house. Whereas if you bought resale, even a relatively new one, say 5 years, if the pre-construction property is going to take another 5 years, then you would have a 10-year-old resale property or a brand new condo that you have as well. So, factor that in when you're thinking about things, but an interesting way to look at it.
Absolutely.
So then let's talk about population growth, because this is what gets me really excited about Calgary. And this is why you're really seeing prices going up there versus, say, Edmonton as well. Edmonton has cheaper real estate than Calgary does, but you're not seeing the price appreciation because people are not flocking to Edmonton like they are to Calgary. And Alberta in general, though, is benefiting from this. You're seeing significant growth overall. And we'll have another slide about some of the numbers there. But Calgary as well, very well paid, highest number of millionaires per capita of any major city in Canada, but also very, very high wages and salaries. The average was 63,000 in 2022, and that has continued to go up and have continued to see very well paying jobs in the city. But this is where Alberta is expected to lead population growth, going to be increasing by 48% by 2043. Actually, just over the last year, Alberta grew by about 4% population growth. That is absolutely insane. And this is ultimately why you're getting the price appreciation, because all those people flocking into the city, it is putting huge pressure on the rental inventory there. When people move to a city, they first typically rent for a little while before deciding exactly where they want to be. So you've seen significant appreciation on the rental side, but also then on the housing side, the resale and pre-construction side as well. People want to buy houses and there just aren't enough. There's less than 1 month supply for townhomes in all of Calgary. That means in, I think it was 25 days, all of the inventory would be sold if nothing new is added to it. So this population growth is really contributing to the outsized performance of Calgary. And there's no sign of that really stopping. Population growth expected to grow by 62.5% over just the next 20 years, going from about 1.6 million to about 2.6 million. That's a million more people that need houses. And Calgary is not building enough. They have supply shortages as well for labor. They don't have enough trained people. Not to mention Ontario, they're pushing to build a ton of houses as well. There's just not enough construction tradespeople out there to build the number of houses that we need. And you're seeing record net migration into Alberta. The most ever that they've seen, record population growth for the last 4 quarters. A significant chunk of that, about 2/3, is from international migration. So people outside of Canada coming into the country. And previously, majority of those people would have landed in the GTA, Vancouver, Montreal. But nowadays, they're like, holy crap, it is so expensive. For $500,000, you can get a studio in Hamilton with parking, or I can get a 4-bedroom townhouse in Calgary. It's a no-brainer for a lot of people that, hey, I'm just going to go straight to Calgary with remote work possibilities, strong economy, well-paying jobs. Why am I going to consider any other city? And you are really seeing that. But not only that, about 1/3 of the people moving back to Alberta is interprovincial migration, so coming from other provinces. And this is primarily from Ontario. Over about the last 10 years, you saw a lot of people leave Alberta and leave Calgary to go to Ontario because that's where the jobs were over that time period. But now we're seeing that trend completely reversing and tons of people returning back to Alberta, primarily to the Calgary city. And again, it comes down to a very strong economy.
When we look at reasons to invest in a city or in a certain geographical area, you want to have the right drivers in place, right? You need to have a population that's growing because that creates a demand for the housing. But you also have to take a look at why the population is growing. When you have a booming economy, more people are going to want to go and work there because they're going to be able to find the jobs that they like. They're going to be able to be compensated for the work that they do, and the cost of living is low as well. So this creates a phenomenal set of factors that are really making Calgary very, very enticing for people to move to. This is, again, as Kyle mentioned, both from the international markets, but also within Canada itself. Just certain places in Canada are just unaffordable right now. So people that want to get into the home ownership or even to start their investment portfolio, they have to look at markets where they can actually afford to do so. And Calgary definitely is top of our list in that category. When we look at Calgary in general, in terms of its economic output, it's fourth across all major cities in Canada. Calgary itself is doing just under $105 billion in their GDP, which is more than the entire province of Saskatchewan and Manitoba. So take that into consideration. Calgary is producing more than 2 of the other provinces in our country, which is phenomenal. And again, the cost of living is a lot lower. You can see the differences between the other major cities in Calgary as well. And then we start to look at the growth in the economy. Yes, fantastic. We look at the numbers today, but what are we going to see down the road? Alberta and Calgary, they're essentially leading in almost every type of stat that Stat Canada is putting out. So Alberta saw a nearly 5% growth last year, and they are poised to lead the country this year at just under 2% in terms of its overall growth. And next year, again, this is all very modest numbers, we're expecting Calgary to lead the country, again, the nation, exceeding its growth projections of 2023 to just over 2% next year. And then you start looking at the different types of jobs. So when we talk about the strong economy, we're not talking about entry-level positions. We're not talking about minimum wage jobs. We're talking about high-paying six-figure salaries. And Alberta has been punching well above its weight, performing much higher than the Canadian average. Alberta has seen over 1,000 or 100,000 new jobs that were added in December of 2022. And many of those jobs are in and around the housing market. So you look at construction jobs, you look at property management jobs, you're looking at people that are making significant revenue, along with those other major industries that we're going to talk about next that you've probably heard over the last few months in terms of all the advertising that Alberta is doing, trying to get people over to their province to fill some of these positions. Oh, well, here we go. We're going to talk about oil a little bit. Cal, you want to jump in on this oil thing? I think you have a better grasp of this than I do.
Yeah, absolutely. And that's where, Calgary was built on oil. It's an important part of the economy, but it is diversifying heavily away from that. It's no longer dependent on oil. And that oil has allowed Alberta to have the lowest net financial debt in Canada. That means, they have no provincial sales tax, no land transfer tax, no development charges, none of the stuff that many of the other provinces do have. And they're actually, forecast to run a surplus for their provincial budget. When's the last time you heard of a province or government running a surplus? It doesn't happen. It hasn't happened in years. But even at just $70 a barrel, oil is higher than that right now with the ongoing crisis right now in Israel. They're going to be adding even more to that surplus, nearly $1 billion. That's amazing. That's things that they can use to continue to maintain their infrastructure, to cut taxes that are already the lowest, some of the lowest across Canada. So this is a huge factor for the future benefit of Alberta. And like I mentioned, they're diversifying away from oil and gas. Calgary is no longer a one-trick pony, diversifying heavily into technology, into real estate, into finance, into all these other industries that are going to help build its future. When's the last time you heard about a new oil sands project that was announced? Probably been over 10 years, right? So in 2015, they did cut back. None of those jobs were really added back. They're continuing to continuing to pump oil from the ground where they can to take advantage of the high prices. But you're not seeing massive new expansion in the oil industry. So it's other industries that are really making up that difference. And it's no wonder because Calgary has actually been rated as one of the 10 most attractive cities for workers. And this is because there's a huge proportion of STEM graduates, in science, technology, mathematics. These are all jobs and fields required for, future advancements for tech jobs. And you're also starting to get more of an incubator city approach. There are over 400 smaller tech companies in Calgary, and most of those are startups. Huge part of that is the low cost office space. It's about $17.50 in downtown Calgary, double that in downtown Toronto, almost triple that in downtown Vancouver. So for a lot of companies, it makes sense when you need a cheap office footprint with really educated workers. It's a no-brainer to move your operations to Calgary. And there
You're
have
also
been
incentivizing people to start their own businesses because or they know that their carrying costs are going to be significantly lower than if they were to start up those same businesses in other provinces, in other major cities. Just they're not going to have the cash flow. And for a new business, cash flow is critical to the survival of their business.
Exactly. And that's why they have very low corporate tax rates. And that's why there's so many headquarters that are actually located in Calgary as well. But these are some of the success stories coming out of Calgary. These are the unicorns, billion-dollar valuation companies that have grown up there. Neo Financial, I see them in malls all over the place now trying to recruit people for their financial products, but there have been many more. And when the founders of these companies, hit big success, they tend to reinvest that money. Elon Musk, he didn't start with Tesla. He started with PayPal and has gone on to create several other companies. That's what happens. So they continue to invest, and I expect more success stories to come out of the Calgary market. But not just tech. Now we have big companies moving to Calgary, and this is what gives me confidence in the market. When you have Amazon, one of the biggest companies in the entire world, setting up their Amazon Web Services in Calgary. There's only 2 locations. The other one is in Montreal, investing billions into the city. TELUS opened up a 60-story headquarters in downtown, hiring nearly 10,000 people in Alberta, investing nearly 17 billion in the marketplace. WestJet making Calgary their international hub for all of their global flights. There's only 4 international airports in Canada, and Calgary has one of those now. So adding thousands of jobs into the economy of Calgary. But away from even technology, you have de Havilland Aircraft Manufacturing Company. They're actually based out of Downsview in Toronto. They build water bombers and work planes. I think those are going to be more and more important, especially after the summer that we had with record wildfires. They're setting up just east of Calgary, relocating their entire operations. There are over 1,500 jobs that are going to have to be moved out there and moving their headquarters. And it continues to go on. These are some tech companies, big tech companies out of India as well, Infosys, Emphasis, SideTrade. It's these sort of announcements that get me really excited. And you don't hear this about other cities like Halifax, like Edmonton, like Sudbury. All of this is happening in Calgary. But back to basics, TD, RBC, some of the biggest financial companies in Canada, IBM, one of the biggest tech companies in the world, have operations in Calgary. And the thing that gets me excited is they continue to expand those operations, adding more jobs into the local market as well, because they're seeing how successful it is for them. And why? Well, it's pretty simple. A lot of it comes down to dollars and cents. They're fleeing high cost areas, and taxes is one of the biggest ones. We've mentioned this a couple of times. Alberta is the lowest corporate tax rate in Canada. For real estate, they have no land transfer taxes, no development charges, no provincial sales tax at all. There's no HST. There's just a 5% GST that's federal. But expensive housing is another reason that many people and employers are moving there too. The second lowest cost of living of all Canadian cities and 9th in North America. That's amazing. And government regulations. Alberta tends to be very anti-government. Keep your hands out of my pocket, stay out of my business. So they have things like no rent control. They actually enforce the rental rules that are there. If you need to evict a tenant, you can typically do that in about 30 days, not 10 to 12 months like we're seeing in Ontario nowadays as well. So significant benefits. Yanish?
These bullet points, Kyle, and for those that are listening, these were the fundamental reasons why I was comfortable investing the last 7 properties that we invested in as a family in Calgary, because of the initial upfront costs. When you start looking at other provinces and some of the closing costs, depending on the property that you buy, you might be looking at anywhere from $50,000 to $75,000 that you have to pay out of pocket on closing. You're not able to build a portfolio quickly like that unless you have the capital to do so. In Alberta, the closing costs are zero. I paid, I think, $1,300 or $1,400 for my lawyer to do the closing and do all of what the lawyers do, but that's it. I can't do that here today. Anyways, eventually, sure, but today I can't do that. I can't build my portfolio as quickly as I did with the types of properties that I wanted to have, unless I had the ability to buy those types of properties in Calgary. And ultimately, when you buy a property and you're using it for investment purposes, you want to have a level of trust and a level of confidence with your tenants. One of the best ways to do that is to know and be confident that the rules that are in place to protect both the landlords and the tenants in a province like Alberta is fair. So they don't allow landlords to abuse their tenants, which absolutely you don't want that to happen. But on the flip side, they don't allow deviant tenants to stick around either. They don't get away with not paying rent. They don't get away with damaging your property. All that stuff they do have to pay for, and there are oversights in place to make sure that that doesn't happen. And in case they do, the landlord is taken care of quickly. You don't have to wait a year to get someone out of the property that isn't paying. You still have to pay your mortgage, even though that they're not paying your rent. So you don't want to be in that position.
Great points. And we covered all of this already. So let's talk about what's actually going on in the Calgary marketplace and how it's performed over the recent time frame.
Yeah, I always love sharing these type of numbers with my investors and my potential investors because it really puts a smile on my face. And honestly, the market numbers for Calgary is the opposite of the other major cities. It's going in
Yeah,
the
and
other
keep in
direction.
mind, this is the worst real estate market Canada has seen in about 30 years with the highest interest rates in about 20 years. Keep that in mind.
Yeah, absolutely. So when we look at the stats, single family homes up 50, almost, sorry, over 14%. And now we're looking at an average of over $730,000. It's slightly over, but I put 730 to round down. Townhomes are up over 22% year over year, and condo prices are up 2.4%, but that's because they were up against some strong numbers from the previous few months. So it hasn't seen the same type of trajectory, but condo prices are still climbing, and we've actually just hit the highs because we did see a high in 2014. That's where the condo prices were at their peak. We saw a dip, and now they're back up there. So this is all strong momentum. In addition to the year-over-year sales, we also want to look at the rental numbers. So Calgary has seen over the last 2 years over a 65% increase in overall rents. We saw approximately a 30% increase in 2022, and year to date, we're seeing over a 25% increase in overall rents. Breaking down the different categories, the numbers are there. You're looking at, between 24 and 29% that you're going to see increases in rent. And those dollars add up anywhere from $400 to nearly $500 more a month that you can make per these properties than you were able to do last year, which was a record-breaking year in itself. So when we look at buying an investment property where you're going to be cash flowing and you're not going to have to drop, $300 to $400 a year just to maintain the property, very few markets in Canada will allow you to see these types of returns.
And keep in mind on the rental side of things, when you're buying pre-construction, you're not getting it for a couple years. So you have time for rents to continue to go up over that time. You can see the last year, they're up on nearly 30% for a lot of these units. So even at 8% price growth, which I think is achievable over the foreseeable future for the rental side, you're adding $100, $200 each a year to the monthly rent. So a unit renting for 2,000 today could easily be renting for 25, 2,600 by the time you actually get it in several years as well. So that's one of the biggest mistakes that I see people making when they're doing the rental analysis. Especially if interest rates stay high, rents are going to continue to go up as well because it's keeping people out of the existing real estate market. So when you're doing your analysis, keep that in mind.
And now sharing some of the current opportunities that we have. We don't definitely want to make this a hard sell, but simply want to show you what we have. We have a brand new project called MYNE Condos, where you can get a condo starting at $320,000. They come with a 2-year rental guarantee, free property management, and the deposit structure is 10% spread over 1 year. We have downtown properties in prime locations that are starting at $475,000, also with a slew of incentives, including the rental guarantee and property management. Also, 10% deposit structure. There are 5% and 20% options that provide you with less and more incentives. Getting into the townhouse sector, which saw a 22% increase, we have 4-bedroom townhouses that are priced at $535,000, also with the rental guarantees and a very favorable deposit structure. The property that I bought in 2021, it's in essentially a very, very similar area. It's a latter phase of what I bought into at $370,000. So you can see the difference in terms of what they're selling for today. And then we get into the freehold market with duplexes and single family homes between $550,000 to $700,000. A 1-bedroom studio in some of these major markets are more than that. So keep that in mind as to why people are looking to move there and invest there, because they know they can get a much bigger bang for their buck than they could in other cities.
Yeah, and there have been many project announcements in the GTA recently. I've seen a ton of emails coming in, buy from the 400s. That's for like a 300 square foot studio without parking, and it'll be like $499 sort of thing. So for that same price, you can get a 4-bedroom townhome in Calgary that's going to rent for a lot more than that studio will in the GTA. So that's what makes Calgary so attractive. You can still make the cash flow numbers work even at elevated interest rates as well. So Nish, did you want to talk about Imperia and answer the question that we had earlier?
Yeah, so the question that we had, just so I can read it out, was the downtown condos where they're going for about $900 a square foot, which is the smaller ones, the studio ones, approximately $430,000. It doesn't come with any extra parking or any incentives. Sorry, it doesn't come with parking. The question was, do you think someone would be able to make a profit by 2027 when it's expected to be completed? So if you're looking to sell your property before you take possession of it, chances are in any city with the new tax laws, at the end of the day, you probably will not make a profit. You might make profit on paper in terms of what you're selling it for, because you will see a significant increase to the purchase price from the selling price. But because of the tax implications and the fact that you will have to pay taxes on 100% of the profit, that may not be in your favor. Now, if you wait for a minimum of 1 year, the majority of those negative tax implications you don't have to deal with. So that's always been our suggestion for people that want to sell their property sooner than later, is to make sure you do so after owning it for a year. But we definitely do believe that the properties will be profitable. I bought a property, a 2-bedroom, 2-bathroom in the downtown core in Calgary. It's a sister property or sister project of Imperia, and I am confident that we will see some tremendous returns. Now, essentially, I don't have a crystal ball, but based on all the metrics that we're seeing, based on the appreciation, based on the location, and also based on the rental income, I'm quite confident that this is going to be one of my better investments out in Calgary.
Yeah, and Imperia as well, keep in mind, is a high-end luxury product. It is not your standard typical condo. So it is going to be at a higher price point because it is more of a luxury product. It's got some of the best amenity packages that we've ever seen in Calgary. The entire top floor, it's not penthouses for residential units. It's actually dedicated to the entire building. And they've got an amenity package that is really unrivaled in any of the other projects in downtown or even across Calgary as well. So keep that in mind. Yes, it's a higher price point, but you're getting a lot more for your money, and it's a much higher quality, higher level of finishing than you would typically expect in the Calgary marketplace as well.
So our newest project, MYNE Condos, is in the northeast of Calgary. 4 out of the 7 investments that my family and I have made has been in the Northeast quadrant. One of the major reasons why we did so is this is the fastest growing area in Calgary. And the numbers don't lie. You saw what my property was purchased for. I mentioned what my initial property was purchased at, and now you're seeing what the new condos are being sold for. So you definitely can see that there is an increase. This is due to the growth in the South Asian community, in the Eastern Asian community. There's a lot of people that are moving into this part of the city because there's communities in place. Everything that you want to have in terms of the necessities and the amenities are already there. The Northeast, you're under 20 minutes to the downtown core, and you're only about 10 minutes away from the airport. There's so many reasons why this is a phenomenal location. And with the MYNE Condos, we launched last week, and it's been extremely, extremely popular. We've sold out more than 50% of the larger units and also the smaller units. They are going quickly. So if you have any questions about this project, please certainly reach out to us. We're happy to talk to you about MYNE Condos. But we do have many other options as well in case this isn't an ideal fit for you. And sorry, going back to MYNE, this is what you're looking at in terms of your starting prices for the 1-bedrooms under 320,000, 2-bedrooms, 2 bathrooms, includes parking under 400. You're looking at 375, and then we have 3-bedroom, 2-bathroom condos. There's not a lot of these 3-bedroom condos that are going up all over the place. So these ones are also selling very quickly because a 3-bedroom, 2-bathroom property is perfect for a young family. Like I live in a condo myself. It's a 3-bedroom condo, and I've been here almost 5 years, 6 years. And I love the space that we're in because we have the space needed. And a lot of families like mine are looking to invest in properties like this because it's easy to live in, it's easy to manage. And also it comes with some great incentives. You have a 2-year rental guarantee where the developer rents the unit from you and they pay you directly. And also you're looking at a down payment structure that's very, very reasonable, 10% over the course of the next 4 years. Sorry, over the course of the next year, but you know, your property closes in 4 years. So the timelines work well, and it gives investors a chance to get their foot into the real estate market, where in other places, I don't think you can find anything even close to this that will show the same type of appreciation and return.
So that's our presentation for today. Thank you so much for attending. We can tell that we're very passionate about Calgary. We do this every single day. And when you're investing in real estate, this is a significant investment. You're talking hundreds of thousands of dollars. So you can't afford to get it wrong. You want to be working with the experts. And we sell Calgary, we sell across Canada every single day. So if you did want to work with an expert, please reach out to us. We'll be sending up a follow-up following this meeting with our contact details. You can book a call and we can chat more about what your objectives are, what your investment is looking like, and we'll find the absolute best one that we think will maximize your return. So we've got a couple extra questions that we'll answer now. Feel free to continue to add them in the Q&A box and we'll try to get to as many of them as possible. So the first question, what % of your personal portfolios are currently in Calgary? Right now, I have 1/6. So one of my 6 properties located in Calgary. I am looking to add another one right now, and I would have added several more, except I have 4 properties closing in the next year and a half that I need to get mortgages on. So I still need to qualify for mortgages like everyone else. And I just need to be careful that I can do that, easily without having to go to different sorts of lenders. So I would have definitely bought more if I could have, but mortgages, it's challenging even for me.
Yeah, great point about the mortgage requirements, Kyle. For myself, I have 80% of my holdings in Calgary, and I've been fortunate to purchase them that have good time gaps in between the closings. So this way I don't have multiple closings in 1 year. And that's really one of the ways you can help grow your portfolio, is to strategically buy the properties, not just the ones that make financial sense at that time, but also thinking about your financial commitments at the time of closing, because you need to factor that into the equation as well. With Alex, I believe he has, Kyle, do you know what Alex's numbers are?
I don't know off the top of my head. It'd probably be about 25%, I'm guessing, just based on that.
Fantastic.
And I did want to add, my closings were nicely spread out, but then COVID messed everything up and they all got delayed and then bound together. So next question, what demographics are you seeing moving to Calgary? Single people, families? Yeah, both, everyone, everything. You're seeing a ton of families moving there because people need more space, and the cost to buy a house in the GTA and any other major market, heck, most of Ontario is out of the price range of most people. Where, we've shown you can get a townhome, 4-bedroom townhome for $535 all in. That's very attractive to families. But the Calgary, the local market is attracting single people, couples, everyone as well, because of the job opportunities. They're going there because they can get a good, well-paying job and have a good work-life balance with an affordable lifestyle. That's attractive to anyone.
Absolutely. And when I look at my current investors and what I'm hearing and what I'm also seeing, especially from Ontario, you're looking at young families being the major makeup of people that are moving from Ontario to Calgary, because as you start to grow your family, your costs become significantly higher with childcare, with all the other things you want to put your children into, whether it's sports or extracurricular activities. And that's very challenging in high price markets. So this is why we're seeing good growth in the single family properties and townhomes, because we have a lot of people from Ontario that are moving to Alberta, to Calgary specifically, because they can afford the type of lifestyle that they want to be able to provide for their family and their future generations.
Absolutely. So next question, why Calgary and not Edmonton? So that's a great question. And it comes down to Calgary, you're getting appreciation. Edmonton, you're getting cash flow. That's ultimately it. You haven't seen really any price growth in Edmonton over the last 2 years, whereas Calgary has significantly appreciated, and I expect will continue to significantly appreciate. Edmonton, cheaper prices, and the rents that you get are very strong, so you can actually get a little bit better cash flow.
Yeah, and when it comes to the economy in Edmonton, it isn't as diversified, anywhere near as diversified as Calgary. You're not seeing the sectors like the tech sector, manufacturing, financial services, healthcare. Those jobs aren't growing. They're relatively staying flat. So that's why their population isn't increasing anywhere near to the level of Calgary. And honestly, I don't see that changing in the foreseeable future. If it does, then it's something that we definitely will address. But right now, there's no indication that that market is moving that direction.
In Edmonton, think of it more like Ottawa in Ontario, whereas Calgary is more like Toronto for comparisons. So Dave, do you have the rents you would get for each of those places that you just mentioned? So this is a hard question because there's so many variables that go into the rents, the size of the unit, the location, the type of housing, but I'll kind of give you general ideas of what you can expect. And Dave, if you have more questions, please book a call with us and we can go into detail about the specific projects. So a project like Orson or even MYNE, a 2-bed, 2-bath, today, probably renting around the $2,000 mark for the 2-bed, 2-bath. Something like Imperia downtown, heck, the 1-bedrooms, I think they have a guarantee for what, 2,400 a month. The 2 bedrooms are renting for over 3,000 in a lot of cases with the guarantee. So townhomes as well, corner view, those probably going for about 2,650 today. We've seen comparables on the marketplace. So just a huge wide range of rent. So Dave, please book a call and we can go into more detail with you. Another question, MYNE Condo seems to be located near Cavallo, and last year that was around 295,000 for a comparable unit. Can I say that my unit is now worth something similar? It's tough to do a comparison like this, especially since mine is closing, probably 3 years later, 2028 versus 2025. So the answer would be somewhere in between what you paid and somewhere where mine is priced at. Otherwise, it becomes more a factor of the closer you get to the resale or to the closing date, resale becomes a much bigger factor, but you would be somewhere in between. It's impossible to predict exactly what that value would be today. Next question, does your brokerage offer property management services for Alberta properties? We don't offer them directly, but we have some really good partnerships with a lot of AAA companies out there. Niche has a lot of experience with those, and a lot of our clients have used those services as well for properties that have closed. So we can absolutely refer you to a trusted partner out there. And something interesting to know that properties are not rented by real estate agents in Alberta like they are in Ontario and other major markets. It is actually property management companies that do those services for you. What you get is virtually identical, though. They'll advertise the unit, do the showings, screen the tenants, place them, write up the lease for you. But the nice part is it's about half the price as it would be otherwise. Typically in Ontario, you're paying 1 month's rent. In Alberta, it's typically half a month's rent or less. Oftentimes, they have just fixed rates to do that for you.
And the other part is if you
So
are
another
looking
benefit of going out there, it's cheaper to rent your unit too.
the other option is if you are looking to stick with the rental incentive programs, at least for 2 years, the developer will manage your property for you at no cost. It's part of the incentive program, so keep that in mind. But understandably, if you're looking to rent it out yourself, then it does make sense to consider having a property manager to manage your property, simply for the flexibility and the lack of headache of you being a landlord out of province.
And typically, the property management companies are charging 10% of gross rent. Now, because of our relationships with some of the property management companies, we do get discounted rates as well. So if you need help, definitely reach out to us and we'll do an introduction for you. And then Craig is asking, ballpark, based on the current rental environment, what % down payment would be required to start seeing monthly yield? That's 20%, right? Which is the minimum that you need to be able to qualify for the mortgage. That's the amazing part about Calgary. The rents are so high compared to the purchase price that the numbers still work. The wild card right now is interest rates, right? You're probably about 6 to 6.5%. That's where you're getting cash flow neutral when you're actually getting the property. But if you're closing on a property 2, 3, 4, 5 years from now, interest rates are going to come down. They have to. Otherwise, Canada's going through a depression. The cost of financing money is just way too high. And then given a couple years for your rents to continue to go up as well, you could definitely be cash flow positive, even at just a 20% down payment. Whereas if you tried to do that in Toronto, you're going to need 40 to 50% minimum to make the numbers work.
Yeah, no, great point. Absolutely.
All right, so that's all the questions that we had. Does anyone have any other questions for us today? And we're at 1 o'clock as well. So good timing then. Should probably wrap it up. Thank you everyone for attending. We appreciate your time so much. We've had a blast chatting about Calgary. Again, you can tell we're passionate about this. We want to help grow your real estate portfolios. So please book a call with us. We'll be sending a recap of this session after today's meeting with our contact information. So don't hesitate to book a call. We will spend as much time as you need so that you're 100% comfortable with your purchase. Again, we're all about education. We want to give you the information you need so you can make an educated decision.
And speaking on education, if there's any topics you'd like us to cover, like we did today with the pre-construction prices versus resale, shoot us an email. We love to share the information and talk about the experiences we've had personally. So this way everyone is more educated and they have all the information at their fingertips to make a good financial decision for yourselves and the future generations.
Awesome. And we'll wrap it up at that. Thank you everyone for attending, and bye for now.
Have a good day, folks. Take care.